Welcome back. As promised, let's get that conversation going with Rakshit Ranjan of Marcellus Investment Managers. Rakshit, welcome to the show. Thanks for joining in. So, the heat is on in the air, in the atmosphere, and in in the political field as well, as we are racing towards the 4th of June event. So tell us, I mean, in this whole run-up, the market first fell, and then there's been this rally to fresh all-time highs last couple of weeks and months. What changes, if any, to the portfolio? What have you guys been up to?
Yeah, thank you for having me on the channel, first of all. Yes, we are also closely monitoring the progress of the external environment in the last few months. We've made significant changes as we sort of rev our portfolio more towards high growth. We've added 5 or 6 stocks in the last 6-7 months, which is an unusual run rate of new addition. Largely speaking, we are oriented the portfolio towards companies where reinvestment rates of their cash flows are very high, 80 to 100% in many cases. So, for instance, whether it be some of the relatively low valued companies like say a Narayana or an iShares, these have been 2 additions, or many companies such as say Tube Investments or Trent, where there are multiple optionalities that the businesses are throwing up, which are not fully baked into the price. In effect, grabbing many areas of upside earnings growth generation that are not in the price through many of these changes.
So Trent, Tube Investments, and can you tell us which are the others which have found their way to the portfolio over the last couple of months?
So in the healthcare plus health insurance combination ecosystem, Narayana Hrudayalaya is one stock we added, and the sort of rising energy of premium 2-wheelers that we can see in iShares Motors, we've added iShares as well to the portfolio.
Got it. In your Kings of Capital portfolio, you've also built a position in Motilal Oswal. Now, we all know that capital market-related players are doing very well, whether they're brokers, asset managers. But the question is only about the value from here on, considering stocks like Motilal Oswal have already gone up to 50% in the last 1 year. So when you decided to make that addition in the last 1 month, can you tell us how you assess the past performance and how much of it is already in the price for these capital market-related players like Moti?
Yes, so Kings of Capital portfolio has a slightly different portfolio construction approach than, say, consistent compounders. And in that regard, it was a few months ago that we added Motilal. We've actually managed to benefit from a bit of the upside, a lot of the upside that has come through in the last few months. The idea there is if we can't see the abatement of these capital flows into the broader markets, Motilal becomes a very strong play. This is not the consistent compounding type of stock selection under Kings of Capital that we've done. It's a relatively smaller allocation meant to benefit from the increasing capital flows that we are seeing in the financial space.
Interesting. That's really interesting. So it's a slight departure from the usual philosophy, right, at Marcellus, which is looking at consistent compounders, growth in ROCE and the other parameters that you have. Anything else where, I mean, you're willing to look at maybe a slightly shorter term trends and willing to ride them? The Motilal example you gave, anything else that's looking interesting to you right now?
No, not really, and also it's not a departure from that philosophy. So we've got different schemes with different approaches. So, for instance, when you look at our Rising Giants PMS, there's a lot of, or Little Champs even more so. There's a lot of discovery element that we try to capture there. Before a stock would enter into BSE 500, can we discover it before the rest of the market, as a result, discovers after the entry into the broader index? So that's very different from consistent compounders. Similarly, Kings of Capital plays largely the financials piece only. It wouldn't invest outside of financials, and within financials, then portfolio construction includes the bulk of the allocations being towards consistent compounding types of financial services businesses. At the same time, if there are certain tailwinds that in some areas in high quality businesses that we can benefit from without compromising on the quality of the franchise, those are the calls that we've taken.
Any positions, any stocks where you've trimmed your positions?
Yes, so there are a few names where, in a relative way, we expect relatively lower earnings growth. So, for instance, say an HDFCLife versus some of the additions that I've talked about, there's a big 5-7% delta between the expected earnings growth rate of those two types of categories of stocks. So it would be HDFCLife. We trimmed a little bit. Given the weak consumption macro from a couple of consumer stocks, we have trimmed a little bit. We haven't fully exited, but we've trimmed a little bit from some of the macro affected small ticket consumer company names. Kotak, we had exited a few weeks ago, replaced it with Chola, in fact, in the portfolio on the lending side. So those would be some of the areas from where we've taken money off.
You fully exited Kotak? And this was post the RBI diktat from consistent compounders?
Correct.
And what was it, the RBI recent diktat which made that decision for you?
Correct, because for the next 12 months, we expect the earnings growth at Kotak to be a lot weaker than otherwise. And as I said, Chola, much better earnings profile. Hence, it has been replaced.
Okay, all right, got that, Rakshit. Good chatting with you. Nice conversation as always. Thank you very much, and we look forward to the next one. Okay, with that, let's take a break and quickly come back to our next conversation. And we'll be putting the spotlight on the banking and financial sector space. We'll talk about the trends that have emerged after the Q4 earnings season and the outlook ahead with Santanu Chakrabarti of BNP Paribas.